So, I have a soon to be homeowner wanting to know the difference between a mortgage prequalification and a mortgage preapproval. And I thought, what a great question. And I think it's even better if I put it in video format. So, here we go. A mortgage prequalification, this is the first step in your home buying journey, right? When you pre-qualify for a mortgage, you provide me with some basic financial information, and then I provide you with an estimate of how much you might be able to borrow. But it's not a commitment, a formal commitment from a lender. Although I've been and I continue to be very thorough in my approach, I prefer going a step further with getting a pre-approval because it holds a little bit more weight and says this buyer is serious to a seller's agent when putting in an offer. So let's go to a pre-approval. This is where things get a little bit more serious and detailed. You'll complete an official mortgage application and then supply me with the necessary documentations like W-2s, pay stubs, bank statements, and anything else that's needed. And then my team will then review it and send it to underwriting. The underwriter then performs an extensive check, right? They're going to check your current and past employment, your credit, your prior housing payment activity, and your current credit rating. They will perform background checks, and if you're self employed, they're going to ensure the proper ownership and calculate business income based on tax returns that we provide to them, right? So, pre approval gives you more of a precise loan amount and a term that you qualify for, and it's just an indication that you went the extra mile. You are already done. The mortgage is already approved. We just need a house. So, having said this, I strongly encourage my clients to provide income and asset documentations up front so we can skip that pre qualification letter and get right down to brass tacks. No one wants to have issues come up down the road. And this is the reason why we see so many people getting in trouble with these online lenders pushing out pre qualification letters left and right. They're one sided. The borrower hasn't talked to anybody. All they've done is entered some information into the computer. So when this happens, you give your letter to a real estate agent, you go under contract, then all of a sudden, boom, your income is variable. You now all of a sudden are self-employed. You got commission that hasn't been checked. There's a lot of things that can happen. So this is why we don't want that to happen. We want to get better educate ourselves and ensure that everyone is prepped, locked, and loaded. And this means buyers talk to a lender, me, as soon as possible, and we can ask the right questions so we can avoid all of these issues as fast and upfront as we can. So thank you for listening. And if you want to stay protected against losing out on your dream home by doing just a little extra legwork, let's talk. Bye.